Good morning, guys. It is Friday, December 1st, 2023. We finally made it to the weekend. This is Bathrobe Business. I'm George Yoganov. I got my coffee straight out of bed. Let's get into the news. There wasn't a video yesterday, so I'm just doing a little bit longer one today. It was just too busy. So there's a lot of stories in the market I want to get to, so I'm going to jump right in. The Dow is currently about average. It's down 19 points in the pre-market. S&P is down 10. Nasdaq futures are 52. Oil is at $76 a barrel. And of course, we're going to talk about gold. It is remaining steady at $2,036 right now. Still kind of above 2,000, still at that 2,040 mark for the most part that I reported a couple of days ago. I do have a story that kind of relates to gold that I will get to, but we'll talk about that in a minute. So inflation is the big number. So inflation seems to be cooling. I have my doubts. I do. Inflation rose 0.2% in October and 3.5% year to year. So the inflation number for October itself was only 0.2, and from October of last year, it was up 3.5%. So 3.5% yearly inflation is quote unquote good. However, that's still not on par with where the Fed wants it. It's still a 1.5% away from where it needs to be. The other argument I have is why I think that inflation number is skewed is if you actually look at the data, there's two things that are kind of driving it, and that is a lack of inflation in wages. So people are not asking for raises. People's income is not increasing. And then fuel is the other biggest one. We've been seeing fuel fall for a while now, and it's continuing that trend. Fuel is a tide that lifts all boats, but fuel is also a big component of people's income. And so because of that, I think you're seeing a huge difference in the inflation simply because of those two factors. Wage growth is slowing and oil is dropping. So if you were to factor those out, that's a large chunk of it. Inflation is actually pretty much on par with where it always has been. The interesting thing is Europe's inflation is also down as well. So annual inflation in the Eurozone cooled to 2.4% in November, down from 2.9% in October, and core inflation dropped to 3.6 from 4.2. So their inflation rates are about on par with where ours are, about 3.5, 3.6 between the two of us. So that is a good sign. However, I still don't think that means Fed rate cuts. I still think he's going to raise. I think Jerome Powell is going to raise 0.25% in January or February. I know everybody's talking about a cut in 2024. I have no idea why he would cut it. If you have to think about it, if the rise in inflation has been the only thing that's the rise in interest rates have been the only thing that slowed inflation. Why would he purposely cut interest rates in order to spur inflation again? As a best case scenario, this is going to be the standard. This is going to be a standard interest rate. The baseline is going to be around this 5% mark for a while in order to keep inflation down. Because we all know the second he starts cutting, the market starts selling, the market starts moving, prices start raising, and inflation starts going high. Everybody is waiting. Everybody is waiting. In business, we're working on an acquisition right now. We would love a lower interest rate. We would be salivating if interest rates dropped 0.25 or 0.5 percentage point, because that means thousands and thousands of dollars every month that we would be saving. And so the whole market is salivating and waiting for inflation rates to drop. The second he does, the floodgates will be open and inflation is going to spike back up. So there's no way Jerome Powell is going to lower inflation rates, interest rates. Otherwise, he's going to cause inflation again. I'm almost certain of that. I don't see how that's going to happen. So that's the story on inflation. The Cybertruck has rolled off the assembly line. Elon Musk delivered the first Cybertrucks yesterday. He's been in the news a lot for his controversial interview. I thought it was a weird interview, but too much was made of it as well. I don't understand why everyone's talking about it. I listened to the full interview. He talks a lot about a bunch of stuff. The one that's getting the most headline is his talk about advertisers and how they can go screw themselves. He did not use screw as the word. And he personally singled out Bob Iger, who has his own problems because Disney is not doing good. But there was a lot in that interview that was interesting. I think he talked about car manufacturers in China, which was very interesting. He's essentially saying that the future is in EVs is Tesla and 9 other Chinese companies. That's a very bold statement, but I've heard China is producing some amazing cars in their domestic market. I have seen a couple of Chinese cars here in the United States. When I was in San Diego, I cannot remember the car name, but it looked essentially like a Jeep, and it was a Chinese car manufacturer, and it was here in the United States. So we will see if that ever makes it over here. I think that one's going to be a bigger hurdle for China simply because I kind of consider U.S. car manufacturers a bit of a cartel, especially in recent years. I think they've become more and more protective. Honda, Subaru, Toyota were kind of able to make a foothold early on because they were looked at as lesser brands, and that's why they dominated so powerfully in the 70s and the 80s, is because everybody looked at them as small, dinky cars that no one would want to buy, and so that's why the big three didn't really try to stop them. But you see a lot of territorial dispute and the fact of how protectionist the United States car market is. If you look back at the airbag issue Toyota was having in the early 2000s, that was essentially all publicity and propaganda. There was very little issue. It was that, and then there was the pedal issue, that their pedals were jamming. All of that was incredibly conflated and was just a fear tactic to dissuade U.S. car buyers from buying Japanese cars. If you look at the data, there was nothing there to say that the U.S. Was producing better cars than Japan, and there was nothing that said that Toyota was producing dangerous cars. They just called the CEO in front of Congress, made a big show, but it was entirely a protectionist act from the United States in order to kind of lower car sales from Japan. It was insane that happened, but I see something happening much worse if China was to attempt to come over, because Japan is still a friend. They're not a communist country. They're not a rival. They are, I'm not going to say an ally because we nuke them into oblivion, but they are looked at more favorably than China. I think that's going to be the biggest thing, is the protectionist acts in the United States preventing Chinese cars from coming in. Amazon is launching a AI service called Q. This one I think is just kind of a stupid story. I don't think Amazon's going to make much traction. Amazon often attempts to throw a bunch of stuff at the wall and sees what sticks. Few people remember their phones, and they've had other services like that where they just create a product, nobody buys it, and then it's quietly shuffled off. So they're launching their own AI product on AWS. It's called Q, and I don't know if that's a reference to Star Trek. For those that know Star Trek, you'll know what I'm talking about. I don't know if that's supposed to be a reference to Star Trek, but it's going to be an enterprise product, so not available to the public entirely, but it's supposed to rival ChatGPT, OpenAI's products, but I don't think that's going to gain much traction, and I think this is a weak attempt, and I don't think it's going anywhere. If Google themselves is falling behind, I don't think Amazon is going to be able to come out even level on this. The other big news is this one's a little scary. Cigna and Humana want a merger. So these are two of the biggest healthcare providers in the United States. I don't think this is a good idea. I would hope it wouldn't happen. I don't understand how this would clear FTC regulations, because it would be so anti-competitive. It would seem that you're almost moving to a single-payer healthcare system, except it's going to be private. This would be a huge merger. I don't understand why this would happen. It would not be good for consumers. It would only probably drive prices up. I do hope that the FTC does block this. This is their second attempt. They attempted this 10 years ago and were not successful, but here they are again attempting to do the same. So we will see if that goes through. The last story I want to cover is a fairly interesting one, and I'm actually going to bring up some articles for this because it's in regards to that gold price. I'm going to take a sip of coffee. So the U.S. dollar is weakening. So the U.S. dollar is at an all-time low. The U.S. dollar, I'm going to read this article from CNN Business. It's the U.S. dollar is barreled towards a 3.7% loss this month against a basket of 6 major currencies in what would be the worst monthly performance in a year. So this partly explains the gold number, but this is a little odd to me. I don't understand the explanation that this article is giving me, because they're saying that the reason is interest rates are not, interest rates generally spur stronger currencies. Our interest rates have been rising. Granted, they haven't been raised since July, but they are still very high. And yet, during that time period, the U.S. dollar has fallen. That's what doesn't make sense to me. The article doesn't actually explain what's going on. It's a pro and con to have a weaker currency. Domestically, it's a con because it means that your buying power per dollar is reduced. It's essentially another form of inflation. It is a form of inflation. But globally, it's good because U.S. dollars are the only currency used to buy oil, quote unquote. That is changing a little bit, but still, as a majority, as a standard, all oil internationally has to be bought with U.S. dollars. So a weaker currency means lower inflation numbers for oil, better prices for oil, and as such, you're going to help a global economy because oil is the underlying substructure of everything, right? Everything in the world runs on oil. Everything is moved on oil. So lower oil prices means lower prices for everything. It also means that U.S. exports, of which primarily is petroleum, is going to be lower and easier to purchase for other countries. So it's good for exports. Imports is where it becomes more difficult. And when most consumer brands, most daily brands that individuals use are made in China, like ours are, it's not good. But the reason for the drop in currency is very vague. I cannot find a good reasoning for it because our interest rates are still high enough that the value of our dollar should still be very high. Now, I have also heard that the bond market, it has been very volatile. I'm not a bonds guy, but traditionally China and Japan have been one of the largest bond holders in the United States, and they are slowing with their purchases. And so that is going to be probably an underlying reason of why the currency is dropping as well, is because the bond market is not as strong as it once was. And as you remember, a few months ago, we were downgraded globally on our bonds. So that's the stories of the day. That's everything I have to say. I'm going to get to work, so I hope you guys have a great day. I will see you back here Monday, and enjoy your weekend. Thanks, guys.